Good morning, everybody. Welcome to another Market Report brought to you by Mike Bjork. Today's Friday, and it's July 15th. So happy Friday to all. I hope you guys have some great upcoming plans for the weekend here. We got a lot of economic news to go over today, so we're going to jump right into it. We'll start off with the Consumer Price Index for the month of June. So basically, as you can see, we in May we had a 0.2% increase, and the forecast was supposed to be at 0.2, and it came in at 0.2. So basically 0.2 across the board right there. That is the fourth straight month that we've actually had the inflation going upwards on the consumer price index. And when you strip out the food and energy, which are volatile numbers, this is really what kind of the Fed looks at as the main gauge, and that gives us what they call the core CPI. So again, we had basically 0.2 across the board. We had a 0.2% in May. Forecast was 0.2%, and 0.2% is what it came in at. And that brings us basically up at 2.3%. So it's kind of funny how the PCE, which is the Fed's main gauge of inflation, 0.6, whereas this is at 2.3. So it's kind of a big margin right there. Also on the docket, we got the retail sales for the month of June, and we had a 0.2% increase of sales for the month of May. Forecast was supposed to 0.1, and so it's supposed to drop, and actually went upwards to 0.5%. So great number there, and a lot of it's small ticket items, not even really autos. So as you can see, if you remove the big ticket items, autos is still pretty high here. We had 0.4% back in May, and it was supposed to increase a 0.5% in June, and it went up to 0.7%. So they're kind of thinking that there could be a turning in the market here, that we're starting to see some improvement in retail sales. As you can see by these numbers, it's looking pretty good right now, where we had good numbers here. However, on the Empire State Index, it's a different story. This is basically the manufacturing data out of the New York region. So we had a 6 on the rating. Anything above 0 is expansion, anything below is contraction. And we were able to get out of the rut of a couple months of contraction. We had about 1 or 2 months in a row where we're up. So June and I think May were up. So we're 6 and 6, and then dropped down to 0.6. So right now we're on the line of potentially going into contraction for manufacturing in the New York region. So we'll have to kind of keep an eye on, see if we can get that back up there. Industrial production, we had a negative 0.3% in May. It was supposed to rise 0.5% according to our predictions, and it went up a little bit more, 0.6%. So a little bit better than expected, which is obviously good news. And then we got capacity utilization, better than it came in as expected. So May came in at 74.9%, and forecast supposed to go up a little bit to 75.2%, and exceed that to 75.4%. So good numbers right there. And however, consumer sentiment in July, people weren't feeling as well as they were back in June. So we had June at 93.5. Forecast supposed to dip a little bit to 92.5, and it dropped all the way down to 89.5. And a lot of that could be, again, stemming from the big news on Brexit. People seeing the stock market kind of crash during that week or so. A lot of stuff that's been going on in the news. Of course, I think people are getting tired of politics, so that could be kind of dissuading a bit of people. So this is something else to keep an eye on here. Because if people aren't feeling as well, that means they're not spending money as well. Business inventories, we had a 0.1% back in increase in the April, and we saw that have a slight uptick in May at 0.2%. So kind of a mixed bag of overall with news here in the here. So of course inflation's gone up, which we're hoping to see, but we really want that PCE number to go upwards. But the good thing about that PCE with this whole uncertainty with Brexit is the Fed's not in a hurry to raise rates because inflation's so low. If the inflation is rising, then they might feel more pressure to raise rates. But because they're not, inflation seems under control. That's why they haven't been feel the pressure of having to raise rates. So that's one benefit behind that. Retail, of course, showing a little bit of improvement. Manufacturing is a different story. It dipped a bit, so that's something, again, we have to see if it goes in. And of course, consumer sentiment is an important part of that, because if people aren't feeling so good about where things are at, that means they're not going to be spending money. So retail sales and other things could easily have that trickle-down effect where those could drop. And of course, manufacturing could drop further and such down the line there. So we need to kind of keep an eye on that. Stock market's up, but as we started doing this, a few pulled down, so they're kind of dwindling back a little bit. So when I started doing this, the Dow was up about 24. Now it's only up about 9. Nasdaq was in positive territory. Now it just dropped into negative territory. So just we could be seeing a pullback here so far this morning here, which would be, as I'm doing this, it's almost noon in East Coast time. So they're almost at their halfway point. Also in the headline news is China came in with their GDP, came in at 6.7, better than what they expected at 6.6, so just barely above that. They also had 6.7 reading for Q1, so they're okay with that number, even though it's relatively low for what we've been seeing from China. And of course, we want to spread our condolences to those who suffered in Nice, France, as unfortunately more unneeded lives were lost, and our thoughts and prayers are out to those people. And that was affecting the European markets, but it doesn't seem to be affecting our markets here in the U.S. as much here. We do got a few Fed speakers coming out today. I'll be speaking, so depending on what they say, of course, if there's any surprise what they say, that'll catch investors' ears. That could change where the markets move as well. So let's take a look at the bond market, and we're down again. So we started the day up. So here's where we left off yesterday. We started up here, but now we're down about 9 basis points from where we left off. So it looked like we tested this ceiling here, pulled back. We have a little bit more room to drop further potentially here, because we got the 25-day moving average and this here as a floor support. So it's possible we could drop a little bit further before we could potentially rise up above. So just be cautious here. If you have any loans out there and you're trying to float your interest rate and have it locked in, just be a little bit careful here, as we do got a little bit more space here, as so we could potentially worsen for the short term. Long term, I do think we'll get back up there, but in the meantime, this is what we're seeing. And as to how long it might take to get back up there, it might take a few more weeks or even a little bit longer. You never know what news comes out. All right, folks, it's a little bit long today. I apologize. I hope you guys have a great weekend, and we'll see you guys on Monday. Thanks so much for staying with me, and we'll see you guys on Monday. Take care. Bye-bye.